What's going on, my friends? Today I'm going to blow your mind with something that could literally save you thousands of dollars every single year. We're talking about business credit cards and how they can become your secret weapon for tax write-offs that most people have absolutely no clue about. Listen, I used to think business credit cards were just for big corporations and fancy entrepreneurs in suits. Boy, was I wrong. Whether you're driving for Uber, selling stuff on eBay, doing freelance work, or even just thinking about starting a side hustle, what I'm about to share with you could be a complete game changer for your finances. Here's the crazy part. The IRS actually wants you to write off legitimate business expenses. They've created this whole system where you can reduce your taxable income legally, and business credit cards make this process incredibly easy. We're talking about writing off your phone bill, your internet, your car expenses, meals, travel, office supplies, and so much more. I'm going to walk you through exactly how this works, what expenses you can legally write off, how to set everything up properly, and most importantly, how to do this without getting in trouble with the IRS. Plus, I'll share some insider strategies that even many accountants don't tell their clients about. If you want to keep more of your hard-earned money in your pocket instead of sending it to Uncle Sam, you're going to want to stick around for this entire video. And hey, if this helps you out, do me a huge favor and hit that subscribe button. It really helps me create more content like this for you guys. Let's dive in. All right, my friends, let's get into the nitty-gritty of how business credit cards can transform your tax situation. And I want to start by addressing the elephant in the room. A lot of people think you need to have some massive corporation to get a business credit card or take business deductions. That's completely false, and that misconception is costing people thousands of dollars every year. What qualifies as a business? First things first, let's talk about what actually qualifies as a business in the eyes of the IRS. You might be shocked at how broad this definition really is. If you're making money from any activity with the intention of making a profit, congratulations, you have a business. That's it. That's literally the test. Are you selling items on Facebook Marketplace, eBay, or Poshmark? That's a business. Are you driving for Uber, Lyft, or DoorDash? That's a business. Do you freelance write articles, design websites, or tutor students? That's a business. Are you a YouTube creator, Instagram influencer, or TikTok star making money from sponsorships? That's definitely a business. Even if you're just thinking about starting a business, you can often get approved for business credit cards and start taking legitimate deductions for expenses related to researching and setting up your business. The key word here is legitimate. Everything we're talking about today is completely legal and above board. The power of business credit cards. Now, why are business credit cards so powerful for tax purposes? It all comes down to one simple concept: separation and documentation. When you use a business credit card exclusively for business expenses, you're creating a clear paper trail that the IRS loves to see. Think about it this way. If you're mixing personal and business expenses on the same card come tax time, you're going to be sitting there with a highlighter trying to figure out which expenses were for business and which were personal. It's a nightmare, and it's also a red flag for the IRS if you ever get audited. But when you have a dedicated business credit card, every single transaction on that card is a potential business deduction. Your monthly statements become your tax deduction roadmap. It's beautiful in its simplicity. Plus, business credit cards often come with additional benefits that personal cards don't offer. Better expense tracking tools, higher credit limits, rewards categories that align with business spending, and sometimes even better interest rates for business loans down the line. Setting up your business credit card the right way, before you run out and apply for a business credit card, let's make sure you're setting everything up correctly. The last thing you want is to get denied, or worse, to set yourself up for problems down the road. First, you're going to need a business name. Now, this doesn't have to be anything fancy or officially registered. You can use your own name plus what you do. So if your name is John Smith and you drive for Uber, your business name could be John Smith Transportation Services, or even just John Smith. However, I strongly recommend getting an employer identification number, or EIN, from the IRS. This is completely free, takes about 5 minutes online, and it allows you to apply for business credit cards without using your social security. If you're in the food, delivery, or rideshare business, look for cards that offer bonus rewards on gas and automotive expenses. If you're doing consulting or freelance work, cards that reward office supply purchases and internet phone bills might be more valuable. The key is to choose cards that align with your actual business expenses. Don't get caught up in flashy sign-up bonuses if the ongoing rewards don't match your spending patterns. Tax-deductible business expenses. You can put on your card. Now we get to the fun part. What can you actually write off? The IRS allows you to deduct ordinary and necessary business expenses. Ordinary means it's common in your industry, and necessary means it's helpful and appropriate for your business. Let's go through some major categories. First, vehicle expenses. If you use your car for business, you can deduct either your actual expenses like gas, maintenance, insurance, and depreciation, or you can use the standard mileage deduction. For 2024, that's 67 cents per business mile. If you're driving for Uber or doing delivery work, this alone could save you thousands on your taxes. Office expenses are huge. Your internet bill, phone bill, office supplies, software subscriptions, even part of your rent if you have a dedicated home office, that monthly internet bill you're paying anyway. If you use it for business, a portion becomes deductible. Meals and entertainment used to be 50% deductible, but there have been some recent changes. Business meals with clients or colleagues are still 50% deductible, but meals during business travel can be 100% deductible. If you're traveling for business, those restaurant charges on your business credit card become tax safe. Professional development and education expenses are often overlooked but incredibly valuable. Books, courses, conferences, coaching programs, if they're related to improving your business skills, they're likely deductible. Marketing and advertising expenses are completely deductible. This includes website hosting, social media ads, business cards, promotional materials, and even networking events. Equipment and supplies for your business are deductible. Computers, cameras, tools, inventory. If you need it to run your business, you can likely write it off. The home office deduction. This is a big one that many people either don't know about or are afraid to claim. If you use part of your home exclusively for business, you can deduct home office expenses. There are two methods. The simplified method, where you can deduct $5 per square foot up to 300 square feet, or the actual expense method, where you calculate the percentage of your home used for business and deduct that percentage of your home expenses. The keyword here is exclusively. The space needs to be used only for business. It can't be your kitchen table where you sometimes do work. It needs to be a dedicated space like a spare bedroom converted to an office or a section of your basement set up as a workspace. When you're using the actual expense method, you can deduct a portion of your mortgage interest or rent, property taxes, utilities, insurance, repairs, and maintenance. If your home office is 10% of your home's total space, you can deduct 10% of these expenses. Tracking and documentation. Having a business credit card is just the first step. You need to be meticulous about tracking and documenting your expenses. The IRS requires you to keep records that show the amount, time, place, and business purpose of each expense. For meals and entertainment, you need even more detail. You need to record who you were with and the business purpose of the meal or event. A simple note on your receipt or in your phone can suffice, but you need to have this information. Most business credit cards now offer excellent online tools and mobile apps for categorizing expenses and adding notes. Take advantage of these tools. Some even allow you to take photos of receipts and attach them to transactions. Consider using accounting software like QuickBooks, FreshBooks, or even just a detailed spreadsheet to track everything. The key is consistency. Pick a system and stick with it throughout the year. Don't wait until tax time to try to figure everything out. Common mistakes to avoid. Let me share some common mistakes I see people make that can get them in trouble or cause them to miss out on legitimate deductions. First, mixing personal and business expenses on the same card. I cannot stress this enough. Keep them separate. If you occasionally use your business card for personal expenses, you're creating a mess for yourself and potentially raising red flags with the IRS. Second, not keeping adequate records. Just having the credit card statement isn't enough in many cases. You need to be able to prove the business purpose of each expense. This is especially important for meals, travel, and entertainment expenses. Third, being too aggressive with deductions. Yes, you want to take